Good afternoon. I'm Campbell McCreary, Vice President, Capital Markets at Amvest Capital in New York City. Welcome to the Amvest Capital Live webinar with Medallion Resources Ltd. Medallion trades on the venture as MDL and as MLLOF on the OTCQB. Hope you'll enjoy today's program. It will be available in on-demand replay about an hour afterwards at amvestcapital.com/replays. Feel free to chat or send in your questions. Just use the question pane of GoToWebinar and we'll ask them in the Q&A portion after this formal presentation. Amvest is a New York-based specialist investment management and corporate finance firm focused solely on the natural resource sector. Please read this carefully. Amvest is this call by Amvest is for informational purposes only. Pleased to have with us today Mark Saxon, who is the President and CEO, Director of Medallion, a geologist by background. He was most recently President and CEO at Leading Edge Materials, focused on the development of heavy rare earths and other European mineral properties. Has more than 25 years of experience in the resource sector, representing junior and senior companies, with a particular focus on critical raw materials. Again, following the presentation, we'll have a robust Q&A, and we look forward to having your questions. And I'm also looking forward to the questions that our mining analyst, Adam Graff, will be giving out as well, and already Curious Associate in that department. With that, I see your screen, I see your video. Let's dive in, Mark.
Excellent. Thank you very much, Campbell, and I appreciate the kind introduction. And yeah, it's been quite a while since I've spoken through this this forum, and really I appreciate being able to come back again and sort of share our recent updates. So those who don't know me, I'm Australian, obviously, from my accent. I'm in a town just north of Melbourne at the moment on some kind of light lockdown. So yeah, a few challenges out here, but yeah, life goes on and we're making good progress in Medallion. So today my plan is to touch a little on the past of Medallion and a lot more on the future, I guess. If we look in the past, we've recently achieved some great milestones in terms of the company, and yeah, we're kicking goals in that regard, particularly the TA, which was recently shared, and I'll touch on the results of that one. I guess, yeah, first and foremost, and I was chatting to Campbell before we started, yeah, the last number of months has not been without challenges, and the company lost, I guess, its yeah, its mentor and founder, Don Lay, a number of months ago, and yeah, I think yeah, we can all acknowledge that Don was a great person and a great friend, and a great leader to this company for a very long time, and yeah, he's very much missed. So yeah, well, let's kick on and sort of yeah, on more positive notes, but yeah, with Don's legacy in mind. So Don was I guess, the founder of the company and the vision of what happened in the past, and really Don was a very practical person and very much an environmentalist as well. And so the ideas that Medallion is now working on and the progress we're making is with that thought in mind. And I guess with rare earth elements, it's a very challenging field, and you need to keep in mind what the market wants, which is yeah, low prices, sustainable sourcing, but also I guess the rare earth industry has a legacy of being too high impact, and Medallion's work has been about reducing the impact of the production of rare earth metals, and I think we're making great progress in that regard. So working through the slides, obviously always the first disclaimer that there will be forward-looking statements, and yeah, do your own research on top of what we're talking about today. I hope that's taken as a given. And yeah, please let me encourage you to put things into the Q&A, and I think in other presentations we've done, the Q&A has worked extremely well, and yeah, so let's continue that process. So Medallion has made a wide range of recent corporate milestones, and I guess the first and foremost is the publication of the TA, which was put out around 6 weeks ago, and we'll touch on that today. The separation of high purity magnet metals from Purdue University, that was a great milestone and a big step forward, I guess, for US industry in general. We now have our first letter of intent or MOU in place with an Australian company about the use of our technology. We've had good money flowing in. The company's in a fairly healthy position. And just today, for those who've noticed and read our press releases, we've just added 2 very key board members, with great financial skills, one of them coming from Amvest itself, who are really supporting our leadership and progress in the future, and helping us as we move towards into that licensing and execution phase. So welcome to Daniel and to Gabriel. So I guess first of all, really, it's about what we're doing here at all, and really, I think most people understand the focus of the company in the rare earth element sector, but I guess what we've looking backwards, what was the concept about the use of critical metals to achieve new and exciting things and give us a doorway into green energy and green mobility. I guess even 5 years ago, these things were the stuff of dreams. Today, it's reality, and we can see some of the things that materials are used for across our lives, across industry today, so deeply widespread now that it's almost not a talking point, and I won't dwell on it today because I think probably everyone on the call has multiple investments now in lithium and cobalt and nickel and rare earth elements. They really are the salt and pepper of industry in the future, and they're giving us the properties for materials that we really do demand. And for us in the rare earth sector that I'll be digging a little bit more deeply in today, we can look at electric vehicles and wind energy as the 2 really major drivers. And both of those have amazing growth going forward, which will be demanding a huge amount of materials. So I've been a geologist for about 30 years, perhaps a little bit more. And really, when I started, rare earths weren't a thing. Lithium wasn't a thing. Lithium, I think, was used as a chemical to treat mental illnesses, and now we all know about where lithium comes from, and we've seen rare earths in the front pages of newspapers, and that's been a remarkable change. When I started my career, we used to only look for gold or zinc or iron ore. We looked for nothing else, and today the whole industry has completely been reset. So now the periodic table is completely full of opportunities, and that's really exciting. So things that used to be waste materials and byproducts, just waste materials and our byproducts, and really add a lot of value into every part of our lives. And really, there's nothing that isn't touched by having access to these materials. So for us, and in the rare earth element sector, we're dealing with that little drop down at the bottom of the periodic table, which is the rare earth elements, the top row of that bottom line. And in particular, and I'll use the words in and out of this presentation, neodymium, praseodymium, dysprosium, and terbium. And really what I'm talking about with those elements is the ability to produce rare earth magnets. And so rare earth magnets, for those who haven't seen them, are these interesting little things here. Incredibly strong. For 1 cubic centimeter, if you stick one to your refrigerator, it's not coming back off. When you sell your refrigerator, it'll still be stuck there. They're incredibly powerful, and so we can see the application of those in many devices, many industries today, because of the unique properties they hold. To be able to have intense magnetism without requiring energy is an amazing property. So I guess the really 2 big themes that we're talking about that are underpinning the sector, and it's much bigger than rare earths. It's much bigger than just Medallion. It covers many industries. So it's the ability to generate, store, transport, and use energy. And so we can see very major numbers here that are coming out of Australia that has been calculated by our CSIRO. So we're talking about the move to green energy and green transport will be $30 trillion over the next 30 years, which, a remarkably huge number. And included in that 30 million is 5 to 10 trillion needs to be spent on raw materials. And that's where the demand is coming from for lithium, for copper, for graphite, and for rare earth elements. So in that little graph in the bottom corner there, we can see the main uses for neodymium and praseodymium, those 2 most magnetic rare earth elements. And so, historically, looking backwards, we can think about, I guess, mobile devices, computers. The reason that the old hard drives didn't crash into each other was because of rare earth magnets. Looking forwards, the industry now is all about wind energy and all about electric vehicles. So the time scale on that graph is only 5 years. And so in the next 5 years, the demand for rare earth magnets and magnet metals will be growing, will be doubling. And that's a big challenge for industry to try to keep up with that rate of growth. And it needs Medallion to be successful, but it needs many other medallions as well to be successful, to be able to supply that amount of materials into a growing market, to do it sustainably and to do it in a way that gives access to consumers in the United States, in Australia, in Europe, and not just access to consumers in Asia, where the industry has been based in the past. So that's really the challenges that we're working through as an industry and us as a company. And that's creating amazing economic opportunities and yeah, much bigger than just the rare earth elements. So Medallion's vision, I guess, and this has been established, yeah, long before I turned up and working with Don, I guess, over the medium term. So we began with the end in mind to Medallion, and that's about providing a sustainable source of rare earth elements without the environmental legacy of past rare earth element production. And I want to emphasise that that the process that is being applied by Medallion is a green chemistry process. It doesn't require further mining. It's using a byproduct material, and the technology that we have developed is safe and sustainable and solvent free. So I think all of those things are delivering on Don's legacy, and I think yeah, putting us in great standing into the future. So the way that we're doing this is through the Medallion Monocyte process and what's called LAD chromatography separation, and that's where I'll be focusing now as we move forward. And yeah, please keep questions coming in. So yeah, a moment on the capital structure in the company. Yeah, the graph is sliding away a little during the summer period. I'm sure with the addition of our new board members and with the completion of our TEA, we'll be seeing some improved performance. Do your own research. And on that note, I'd just like to introduce the two new board members, Gabe from Amvest and Daniel from Wellsback Holdings. Both, yeah, long-term supporters of the rare earth industry in general. Yeah, great knowledge, great networks, and they're going to be a very strong addition to our team. Myself at the top there, and yeah, always need to mention Kurt Forrester, who is the brains behind the process we've been developing, and yeah, a very important part of our team. So let's discuss now, I guess, the Medallion approach. And sorry, I'll just move that. Sorry, just getting a weird thing on the screen. So yeah, let's discuss the Medallion approach. And I think most people on the call will appreciate that Medallion has taken a little bit of a different path in the rare earth industry. And so we don't own a mining project, we don't own a resource like most rare earth peers. And so instead, we own a technology, or we own two technologies, to extract and add value to rare earth elements from a byproduct, and that byproduct is called mineral sand monazite. Mineral sand mining was, yeah, operates in many countries in the world, particularly in Australia and Africa, in Southeast Asia, a little bit in the US. And mineral sand mining, the mines were developed to produce titanium and zirconium. They were never produced to mine rare earths, but rare earths are there in the form of mineral sand monazite in a very small amount. And it's that material that Medallion is looking to access and process to extract the rare earths and use that as the feedstock for our process. And we have been working on that for nearly 10 years, and yeah, coming to some key milestones. And the key milestone has been the techno-economic analysis, which was recently completed. And so that's what we'll be discussing now. So the Medallion approach has two sides, as I mentioned, and so the first is the Medallion monocyte process. So monocyte is a byproduct, and yeah, and this is what mineral sand monazite looks like. I hope we can see that in my camera. Mineral sand monazite is a brown sand, and traditionally that mineral sand monazite has been dug back into pits. It hasn't been utilised. More recently, we've seen the price of monazite go up, and so that mineral sand monazite has now been sold to China in quite large quantities. And so really it's a staple of the Chinese industry to produce rare earths is mineral sand monazite that has come from the US, it's come from Australia, it's come from Africa. So Medallion's business model is to divert some of that mineral sand monazite and process it to give a secure and sustainable source for rare earth metals. The second side of our business is Purdue University Linda Wang's LAD chromatography process, which is focused on rare earth separation. So rare earth separation is where we take the mixture of different metals and break them down into each individual rare earth metal. And that's really where the value is created. And so that's kind of close to a 10 times step up in value, I would say, when we do rare earth separation. So Medallion was looking for something to pair with our own work. And so we went out and we spoke to 25 different companies. And in that process, we eliminated those that weren't using green chemistry. We were using those that weren't ready in terms of their technology. And in that process, we identified Linda Wang and her work. And that's been an amazing journey. And Linda's done an amazing job in terms of adding value to Medallion and adding value to, I think, to the rare earth industry in general. And she's getting lots of rewards in the US to recognize that. So mineral sand monazite, as I touched on, is the feedstock that we have been focused on for Medallion Resources. So this material, this rather boring-looking brown sand, is about 60% rare earths, it's mined, it's concentrated, it's a heavy mineral, and so it comes out in a gravity circuit on a mineral sand mine. At the moment, it's being sold into China, but for us, we're looking to divert that material to our processes. It's very rich in neodymium and praseodymium, and so that makes it the perfect feedstock for the production of rare earth magnets. So what we've developed in the Medallion monazite process is a closed circuit method to extract the rare earth elements from that sand, and that's where our value creation is coming from in the future, is our application of that technology ourselves and our sharing of that technology with third parties. So if we look backwards about 5 years, there was almost no one was doing the same thing as what Medallion was doing, and all credit to Don Lay, who sort of developed the process and the ideas and the thinking around that technology. Today the rare earth industry is a lot stronger. There's a lot more interest in what's happening in terms of supply outside of China, and so Medallion is no longer alone. And certainly, I think the best way to view that is imitation is the highest form of flattery, and it really shows that Medallion has been doing a lot of things right in terms of our technology development. And really the big story in the market, and there's not many stories, but the big story in the market is Australia's Aluca, a company based out of Western Australia that is a mineral sand miner. So Aluca has received Western Australian and Australian government support for the extraction of rare earth metals from their own stockpiles of mineral sand monazite. So that's a really exciting pivot in the industry, because something that they used to treat as a waste or even a liability is now having value add to it. That's great for us in Australia and great for Aluca. But it also shows that in terms of permitting, in terms of handling the material, in terms of the marketplace, then there is a really great opportunity in this sector. Aluca will be focused on their own materials. Medallion will be focused on all the other 90% of the market that Aluca doesn't control. So we have a super opportunity here, and that's really what we've been doing as we look forward, is finding those partners, Aluca and similar to Aluca, and looking for places we can operate with mineral sand monazite. So our business model, and apologies for the complexity of this, and please feel free to email me directly for more information. But this is the business model that Medallion has created, and so essentially we have a sourcing model, which is the introduction of this mineral sand into our process. It then goes into what we call the Medallion monazite process, where we extract the rare earth metals from the sand itself. We digest it through a caustic cracking process. We remove a phosphate product, which goes to market. We remove a cerium product, which goes to market. We remove uranium and thorium, which is always associated with rare earth metals, and they can go into market or they can go into long-term storage. And then our rare earth metals head across into the LAD separation process. So the interim stage, and when Medallion started work, this white powder was the material that we were producing, full of all the magnet metals. Now we don't produce that powder in the way we think about our process. We send it straight across, still in solution, into LAD separation, and add that extra value add step. And that's great for our prospective revenues, and it makes the process a lot more sustainable. because we don't waste any material, we don't waste chemicals when we go through a precipitation and dissolution step when we do the separation. So we're pretty excited about how those things are coming together. I've shown some other information there outside the box, I guess. So the red box is the area that we have just completed the techno-economic study on. So that includes, and so a techno-economic study was done for a certain size of process. As we get larger, we can look at adding in generating our own power, adding in generating our own chemicals. That makes our process both more economic. It can get off the grid. It can be a greener process if we do that. And that's really based about the scale of operation that we're working on. And as we get larger, we're able to build on those other those parts around our process. So yeah, we can see on the left-hand side where really most of the mineral sands in the world come from. So Australia is very large, Africa is very large, Brazil is substantial, Southeast Asia is substantial. So we're talking to parties in all those regions about future business opportunities, and I'll touch on the first one that we're working on today. So the technical economic assessment was completed, I think it was about 6 weeks ago, and we put that information into the market. And yeah, first have to deal with the fact that we were rather late on that delivery, and yeah, I certainly apologise for that. It was all external work that was being done, and really it was, yeah, our ability to push on the piece of string to shorten the timeline there was quite limited, so we really couldn't shorten that. Multiplied by the challenges of COVID and inabilities to travel that we face in Australia. The Medallion Monocyte process is based on at least 5 years of work. So most has been done in Canada at the Saskatchewan Research Council, and the other part with ANSTO in Australia. Both of those are government-owned facilities. Both of those have a lot of skills in rare earths and also a lot of skills in radiation management, and that's why we chose them. So the techno-economic assessment is a bit like a PEA or a PFS in the normal terminology for mining, and it's a model that we can now use to expand and vary our understanding of our process. So it's taken 5 years of research and all the data that comes from that research. So that's given us a great understanding of the chemistry, of the engineering, of the process, of the way to handle materials. So it brings all of that together, all of our studies, into one financial model, into an engineering model, sorry, and a financial model. So the financial model allows us to now scale the process that we can scale up and have a look at the change in NPV IRR. We can move our process into any location on the globe, look at the labour costs, the supply networks, access to chemicals. So it's a very powerful model now that we can convert to any situation. As I've said there, our base case for the TEA was 7,000 tonnes per annum of monocyte being processed in nominally in West Texas was the place that we chose, and we looked at the costs and the access to materials for West Texas. Not saying that that's a great place to operate, and in fact, the United States doesn't really have a great deal of mineral sand monocyte, so it's not high on our list in terms of places that we're choosing to operate. But it was a base case, and that's given us the knowledge of process costs. So our capex for that process for 7,000 tonnes per annum of monocyte was $34 million US. And yeah, we have a high level of confidence with that. And that 7,000 tonnes per annum of monocyte, based on a typical monocyte feedstock, delivers us nearly 900 tonnes per annum of NdPr. So if we look at the value of that today, which is about $80 per kilogram, then we're looking at something around $70 million worth of revenue from those two metals alone. So there's a whole lot of other rare earths and metals within the mix. Some we seek to get value from. We don't need to get value from all of them, but yeah, the bulk of the revenue comes from those two metals, which is really where the market is heading, and that's the metals that head off into the rare earth magnet industry. So we didn't provide the NPV IRR for the TEA, and that was done for commercial reasons. We felt that it's a commercially confidential process. There's some patent protection in the Purdue process. However, we did not want to share too much with the competitors, I guess, who were coming down the line. And so we chose, based on some legal advice, to keep that internal. And we're sharing that under NDAs and providing more information with prospective partners. And so I think that's our path for the future. And I know a few shareholders were a little unfulfilled with our TA, but it was the most secure thing to do for the company. And we believe that it was the right idea. Of note there, and my bottom line, which is we didn't include the separation process. So our financial modelling was done around only the monocyte extraction process. It wasn't including the extra value that we gained from separation. And really that was just because we've done a lot more research, I guess, on the monocyte process. The Purdue process is relatively new to us. We haven't done the same level of engineering, and so we couldn't kind of bring those two things together for a public environment. So we're now really happy with, I guess, the work we've achieved under the TEA. We understand that process extremely well. We're speaking to a whole range of partners. But I guess looking ahead and what people are finding really exciting is the ligand-assisted displacement chromatography separation. So quite the mouthful. We call it LAD chromatography. And so this was developed by Linda Wang and her team at Purdue University. And Medallion has an exclusive license for all raw material applications apart from applications to coal. So the coal applications have gone with the US listed company, American Resource Corporation. We are able to apply it to our own needs, and when we see that chart that I showed before, what we are doing is we are dissolving the monocyte, keeping it in solution, no precipitation. The pregnant leach solution passes straight into the separation, and so we can apply it to our own needs, but we can also commercialize this technology and apply it to other companies' needs as well. And both of those are really exciting solutions, and being able to disconnect and focus on customers is part, but also suit our own needs. So the real attractive thing that we saw about this is, it's the idea of green chemistry, I suppose. So no solvents, and if we look backwards in the rare earth industry, then solvent extraction has been a fairly high impact method of dealing with rare earth metals. And so Medallion and a few other companies are looking at solvent-free ways of extracting rare earth metals, and this is a really great technology. Essentially, and the technology has been described to me, I guess, like a sushi train, where you've got a whole different mixture of foods coming down along a sushi train, and so what the LAD process, the ligands, are doing is grabbing plates of food from the sushi train, and it's being very selective. It's only choosing the foods and the materials that come past that it's actually designed to choose. It's not taking everything. And that's the separation process. So the ligands are taking, we've got ligands there that take neodymium, we've got ligands that take praseodymium, and we've got ligands that take the other metals that are valuable. So we don't need to go through the full group separation, which is the solvent extraction process, where, anyone that's familiar with the industry knows that we're talking about a football field of separation tanks when we're doing group separation in solvent extraction. This is very selective, and so relatively low capital, relatively small footprint, very selective, produces high purity materials. So we can see the little the purple material on the slide there, and so that is neodymium, and neodymium carbonate in that example. So that's material that Medallion received mineral sand monazite coming from a US supplier. We digested it using the Medallion monocyte process, and we passed it directly across into to Purdue University's LAD chromatography process. Everything in solution, high recoveries, and very efficient. And so that was a really great milestone for us. So we're now digging a lot more into that process. So as we look sort of forwards, thinking about what we're going to do with the technologies we've developed. So I guess we've got two ideas in this process. We've got owner operate, which is Medallion building and operating our own technologies. The other way is to look at licensing our technologies, and we've discussed that in some press releases. So both approaches, I think, will have great merits. But as we look at the licensing process, then it gives us the opportunity to move a little bit quicker, because we've got partners then in various locations who are able to take responsibility for the permitting process, move the project ahead at a rate that's faster than is available to Medallion alone. So it gives us a lot more irons in the fire, let's say. So the first partnership that we have signed is with an Australian startup company called ACDC Metals, and while I call them a startup, they have 3 resource stage projects in Australia, non-JORC compliant, and they're historic in NI 43-101 context because they're older projects. They have been drilled out, they've had resources, they're very close to former mines that have been producing mineral sands in the past. So on the map there, we can see a bit of an ugly purple blob, which is called the Murray Basin. So I live very close to that here in Australia. It's a very well-known district for mineral sand production. And it's very enriched in mineral sand monazite. So ACDC are seeking to take monazite from their own projects and take monazite from other projects and use the Medallion technology to build a facility somewhere on that map. And so that's the process we're working towards with ACDC Metals. Medallion is getting exposure to the company as a whole because we'll be a pre-IPO shareholder, which is gives us a great opportunity for step up in value. It also gives us access to technology development. It gives us access to royalties once the facility is built. And really gives us that first stake in the ground that we need as a company. And as we saw before, Aluca is doing a very similar thing in Western Australia. So we're seeing this as being the balance to that, and being able to take feedstock from multiple sources and use this as our first example of how the process is going to work. So we're really excited about that, and we'll see a lot more news from that coming down the line. So I've shown this picture in the past of kind of the major mineral sand districts in the world. So I've got a little red box there for Eastern Australia. So what we have assigned to ACDC is an exclusive license kind of in that little red box. So that's the only place that we have discussed so far. We're now discussing similar kind of arrangements in other parts of the world that are equally rich in mineral sands. And there's some obvious standouts there, and we're in those discussions at the moment. Which stay tuned is all I can say. We've I guess ticked the first boxes, and I guess I'm proud of what we've achieved in terms of particularly the TEA, and appreciate a lot of external support on that one. And really that was the focus of Don Lay and his efforts over the previous 5 years have been directed towards getting that TEA published and really having a clear understanding of the Medallion monazite process. And so Don certainly was able to share the results of that and see where we were heading as a company. And I'm very glad that we were able to share that journey together. Looking forwards, we're now looking at how we gain value and valueise that past research, both the Medallion process and the LAD process. So in the short term, we're delivering our life cycle assessment, which in the same way that we had the financial model that sits off the engineering model, we now have a CO2 and impact model that really demonstrates that what we're doing is the greenest and lowest impact solution. So that's very attractive to customers in the current market, and both individual customers and commercial customers. So that's really a key part of our story moving forward. Moving ahead with ACDC and supporting their IPO process, and using that, I guess, as the first line in the sand, the first demonstration of what we're doing as a company in terms of licensing. We're out there talking to other potential partners, both on the monazite side and also the LAD chromatography separation side. And we'll be seeking licensing and sub-licensing opportunities in both those areas. And we're looking at other commercial opportunities as we always have. And we'll be seeing some of those hopefully come to market as well before too long. So I'll leave that one there, and that last slide gives us the overview, and I think I've spent enough time talking. So let's jump into the Q&A. I've got my details there. Please, anyone, drop me a line, and happy to give you a call back at short notice and discuss the work we've been doing. And very pleased to dig into the Q&A and hand back to Campbell.
Great, thank you very much. American Resources came out with a news item today stating they are using an LAD process for rare earth element purification. What is the difference between their process and that of Medallions, which you have a patent license for LAD?
Sure, absolutely, and I touched briefly on American Resource Corporation, and yeah, thank you for the question, and I probably know who the question has come from, so very happy to deal with it. So Purdue University owns the technology and is the developer of the LAD technology. Purdue University has given 2 licenses. So one has come to Medallion Resources. So Medallion's license allows us to apply it to any raw material apart from coal-sourced raw materials. So that's everything else that that sits around the world that doesn't come from coal. So if we look at the rare earth market today, 100% of rare earths comes from products that are not coal. So we were very happy to accept that market. American Resource Corporation is working in coal in the US, and so it was a natural fit for their business and seeking value add. So I guess we're on parallel tracks. We know each other very well. Linda Wang, who is the chief scientist behind the technology, is working both for us, and her team work both for us and equally for American Resource Corporation.
When can we expect to see the results of the LCA?
So they're imminent. So unfortunately, the LCA sat behind the engineering work that was done for the TEA. So we focused. The engineering was independent, and that delivered all of the data and the knowledge about the inputs and the equipment and the people that were required. So that delivered, first of all, financial knowledge, but it also delivers an understanding of the chemical needs. The LCA consultant, which is Enviro out of the UK, then have to look back into the environmental footprint of the production of chemicals, of transport, of all of the inputs that go into it. So that's imminent. We've had very material conversations as we get near the end of that. So yeah, it'll be let's say within a month.
Are Medallion competitors that are extracting rare earths from Monocyte using a technology different from the Medallion process? So you've answered some of that, but maybe talk about the landscape of different people doing MDL.
Sure, absolutely. So when we look at the rare earth landscape, I guess we've got the Chinese market, and then we've got everybody else. So sitting outside of the Chinese market, we've got a range of junior companies who are seeking to develop hard rock resources. So there's maybe 15 of those companies around the globe, particularly listed in Australia and Canada. When we look at the mineral sand monocyte part, it's a very short list, and so there's only, I believe, 2 other listed companies that are active in that space, and so that's Aluca in Australia. Aluca is a very large company, multi-billion-dollar company with their own mineral sand operations. So they have a stockpile of monazite, and they've developed a process to treat that themselves. They're doing a feasibility study at the moment. The other one is Energy Fuels. Energy Fuels, I think, is taking about 1,500 tons per year of mineral sand monazite from Chemours in the US and processing that in Utah. They then send the material to Estonia for separation. So that's the entire sort of scope of the market. Everyone is under the radar in terms of their processing technology, but yeah, certainly our knowledge of the processes is that they have some overlaps, they have some differences. Really, when you talk about mineral sand monazite, the number one competitor is the Chinese market. They're dominant by far, followed probably by the Indian market, I guess, if we look at the markets.
Very well. Does Medallion have any patents itself for their process?
For the monazite process, we don't. At an early stage, maybe 5 years ago, the decision was made to use trade secrets rather than patents. I've been involved in patents with other companies, and the problem with the patent is that you need to expose all of the work that you're doing in a public environment if you're going to secure your patent. That allows other people to take a look at it. Small modifications can then get around the patent. And the company also has to be committed to protecting their patent in a legal environment. Considering the nature of the rare earth industry, the decision was made not to go the patent process, not to disclose that information, and so we stick as trade secrets. For Linda Wang's work at Purdue University, yes, that's patent protected.
I understand the SRC is building a plant in Saskatoon for REE separation. Is Medallion involved with it in any way?
No, we're not. No, we've done a lot of our research in Saskatchewan with the SRC. We've looked at that region for a place to operate, I guess, and yeah, based mainly on logistics. Yeah, it's not a place that's easy to operate, I guess, for the technology that we're applying, because yeah, Canada is not a mineral sand monazite producer. It's yeah, logistics. Obviously, if we want to be reducing the impact of rare earth production, then the transport component is very significant. So we'd rather take our technology to the places where the mineral sands exist, rather than trucking mineral sand monazite around the world into a location that that is a little bit unfavorable. So yeah, our focus has been taking our technology to where the mineral sands are, and yeah, Canada is not that place.
You talk a little bit about the price of mineral sands. Which way has it been going recently, and how long do you think they might stay where they are or go higher?
Absolutely, it's a really interesting market, and rare earths on a whole are an extremely interesting market. So we've seen recent spikes in the price of the rare earth materials. I guess, yeah, looking back 2 years, neodymium praseodymium was $50–$55. Today it's more like $90. So yeah, a very solid spike. I guess that's reflecting a lack of new producers. It's still very Chinese-centric industry, and so there's no new supply coming into the market, and yet we've got this amazing demand coming down the line from wind energy and EVs. So yeah, the price spike is expected. Yeah, still a very monopolized industry, I guess, when we consider the Chinese production. And so really we've got in the market today, we've got the Chinese producers, we've got Linus Corp sitting out of Australia, we've got MP Materials sitting in California who are producing, but MP Materials send their products into China for the value add stages. And so still it's coming through that, I guess, that Chinese marketing network. For the monazite, again, if we look back 10 years, it had very low value, and in fact, it wasn't being recovered. Looking back 5 years, I guess we could say it was $700 or $800 per ton, something like that. Today, it's plus $2,000 a ton, and again, that's reflecting the tightness in the market, in the rare earth market, which bodes well for the industry as a whole. And so that's why Medallion is speaking to a whole range of different suppliers of mineral sand monazite, and looking at supply alternatives all around the world to gain access to that material.
Very good. I'm going to pass it over to Adam and Artie. Adam, does your mic work?
Yeah, thanks, Campbell. Quick question, Mark. You know, can this technology be applied to other rare earth containing minerals that are not monazite?
We certainly have some expertise in that, but I guess when we look at rare earths, there's 200 different minerals. The entire market today is from, yeah, the entire global market. There is no other production really, is from monazite, from bastnasite, and the small contribution from ionic clays. So focusing, monazite tends to be richer in neodymium praseodymium than bastnasite is. So that really is the reason we're focused on that market. The neodymium praseodymium are the magnet metals, and so that really is the future of the market, I think. So yeah, I think we're happy in the business position. There's a whole range of other minerals that can be potential rare earth providers, but they tend to be much lower grade in terms of the amount of rare earths in the mineral and the deposits that hold them, and so the processing is not really that well known. Yeah, I think we're pretty happy with our focus. Not to say that we don't have expertise in those areas, but yeah, in terms of business focus, they're not our priority.
Mark, can you give us an idea, maybe how much monazite is produced as a byproduct of mineral sands mining globally, and how much does that portion of how much does that represent of the total rare earth supply?
Yeah, we're talking there on some fairly sort of confidential and sensitive numbers, so I won't give too much detail on that. We've done a lot of research into that. It's very substantial. It's yeah, maybe up around, or yeah, let's say 95% or more of the material that goes into the market is going to Chinese customers, and there's nowhere else for it to go. So at the moment, it's either being received, a small amount is being received by Energy Fuels in Utah. Yeah, greater than 95% is being received by Chinese customers. A large producer of mineral sand monazite globally could supply, large individual producer, probably 20,000 tons per year of mineral sand monazite, of which there are a number of that scale.
So I'm sorry, is mineral sand monazite, is that supplying 20% of the world's current demand for rare earths, 30%, 40%?
Yeah, it's substantial. I don't know that number exactly. However, based on, because yeah, it's going into a Chinese market, which is not really all that transparent about what is being used in the current market and what is being stockpiled for future use. So yeah, we're unaware of those numbers because it's then being balanced again against the Chinese mining industry as well. But it's substantial. It would be more than 20%.
Okay, and then turning to your process specifically, and I understand you have this TA, but practically speaking, has all the work been done at the bench scale? And have you guys brought this up to a pilot scale? And or what's the timetable on that?
Yeah, I guess we've done. We can look at two sides of that sort of discussion, and this is just a pure focus on the Medallion monazite process. So we've done a lot of bench scale work. We're very happy, I guess, with the chemistry, and we haven't done a pilot plant on any part of the process yet. We know that that's sitting in front of us. So there's two sides, I guess, to the development process. So one is the chemistry, and the other is the engineering of how to operate the chemistry. The chemical process we're very confident in. We've done a lot of research in terms of the engineering, which is about recycling of reagents, which is about capture of heat, which is about how to make some of the real efficiencies. There's still some points there that need additional test work, but yeah, I guess the view of the company and what we're doing now with ACDC is we've always needed to choose a partner and an operator to be able to provide us with substantial amounts of mineral sand monazite, to be able to use real world situations and data to be able to do that engineering process. And so now we're one very big step closer to that. And as we work with other partners as well, then we'll be doing that piloting process in combination with those other partners as well. And that really solves the specific issues of the processing. And but we're certainly not concerned about that. We've got enough data to know that we're pretty confident. The monazite process, it's being applied today within China, within India. We have a lot of knowledge of those things that are going on. So it's not, we're not coming from blind, from nowhere. Yeah, there's a good history of that information, and so we've got a high platform to build
on. So is Medallion going to build the finish engineering and build a pilot plant, with ACDC on their ground, and is that ultimately that pilot plant will be their pilot plant or their plant to then expand?
Yeah. So the certainly we're seeing the building of the pilot plant will be done in partnership with the owners of the mineral sand. the data and the knowledge will come back to Medallion.
And what is the, and I mean, do they have a plan that they're selling mineral sand, you know, to out into the market until, you know, they can build that facility, and
Sure.
and sort of what from their timeline, how does that fit into their timeline?
Yeah, so I guess when we look at what the objective of ACDC is, they have their own resources. So they have 3 or 4 resources here in Australia. One of them is particularly monocyte rich. So they will be getting value, and yeah, they're not just rare earth projects. They're titanium and zirconium and rare earths as well, like many mineral sand projects. So they need to do the piloting on each of those products and get the markets worked out for each of those products. However, yeah, we know they're sitting close to projects that have produced in the past or are producing. So yeah, those risks are manageable. The mineral sand monocyte that comes from those mines or this area of Australia can be sold to a Chinese customer and get decent revenues. However, the step up in revenue is substantial when you do the processing yourself using our technology. So the timelines will be to do a pilot plant using ACDC material or using very similar materials, and that will deliver the technology that's required to build a process here in Australia. So the timelines are not short. We're not talking 1 or 2 years. We're talking, yeah, let's say 5 years or something like that, because the permitting process is really not the piloting process that is the bottleneck. It'll be the permitting process to build a new facility. And we have to remember that monazite and rare earths almost always have an association with uranium and thorium. And so to work in a jurisdiction like we're proposing here in Australia that's able to permit and handle those materials is important. But still, the permitting process will be based around handling of that material.
Very good. Thank you, Mark. Let me hand it off to Erdi if he's got any questions.
Okay, sure.
Thank you. Hey, Mark. The mentioned $34 million capex is for a commercial scale plant.
Yes, that's correct. So our engineering study was $34 million US to process 7,000. So capital cost to process 7,000 tons per year of mineral sand monazite. Yeah, so we can scale up or scale down around that 34 million based on the final operation that we choose.
When do you think you guys can come up with some, like, using this capex number, when you guys can come up with some IRR or NPV based on price assumptions?
Sure, we've already done that, and yeah, we have that data internally. And that came through in the TA, and we've kept that number confidential. And really because it's a model that allows us to vary the numbers to every local circumstance. And a facility, and this is, I guess, where the difference comes in between a typical mining operation. So a mining operation is normally fixed in a certain location. They can't really change too many things about the project. The grade is known, the location is known. And always we can, I guess, in a mining operation, we can change infrastructure and some process assumptions. But with the Medallion process, we're able to take our technology and put it into the best locations. So the best locations are not fixed. It depends on who the customer is, who the supplier of the mineral sand monazite is, the cost of labour, the tax environment. All of those things kind of come into that solution. And so as we work through the modelling, really that really demonstrated very clearly that depending on who we're working with at the time, the IRR and NPV numbers are quite different. So there really was no reason to publish those numbers until we really form that close relationship. So certainly with our work with ACDC, we can go back and we can plug in the exact numbers of the assumptions that ACDC will be working with. But we can go to other locations around the world and do exactly the same, and the IRR and NPV will be a little bit different for each location. So very location sensitive, I suppose, is what we discovered, and so yeah, we're doing that yeah, not in the public eye, but doing that privately with yeah, under NDAs and MOUs with prospective partners.
I have one more quick question. Why do you think this titanium and zircon producers keep selling the Monocyte feedstock? Do you think it's just because of the environmental concerns?
Yeah, all I can say, and I guess yeah, Aluca is the best example. That Aluca at their project in Eneabba, they have stockpiled there since I think it was 1975 or something like that. So they've had a monazite stockpile for a very long time. I guess when rare earth prices were low, then the motivation to supply to ship mineral sand monazite really wasn't great. It would have been covering the shipping costs and there wouldn't have been too much margin. Yeah, as you say, there are environmental concerns. So because it's a bit radioactive, it can build up a radiation footprint on a site that yeah, maybe isn't wanted or is challenging under the permits of the mineral sand site. But yeah, so I guess looking backwards, the mineral sand suppliers have been keen to get the material off site and get a little bit of revenue for it. But now, because the rare earth market is so much stronger, they're now seeking a process like what Medallion can provide to capture that extra revenue that they haven't been available to them in the past. So in the financial modelling that we have done, then by adding value and extracting the rare earths from the monazite, then it can be a very substantial part of a mineral sand mining project. And so those suppliers are all extremely motivated to see if they can capture that extra value rather than passing the value through to a Chinese recipient of the monazite.
Thank you, Mark. Campbell?
Sure. We've reached the top of our hour, and I think we're on a high note. I want to thank everyone for tuning in. If I didn't get to your questions, email me, and if you have any more, and I'll send them over to Mark. And when you log out, please share your feedback either in the box that pops up or in any emails. With that, I'll pass it back to you, Mark, to close us.
Thank you very much, Campbell, and to everyone that's been engaged for the period. Yeah, really appreciate talking about this, and yeah, a really interesting topic, and happy to share individually with anyone. So drop me an email on the screen there, and I can give you a call back as well. So yeah, thank you very much. Have a good evening.
Thank you. Bye.
Thank you.